Now we'll see the types of issues. Public issue or public offering refers to the issue of shares or convertible securities in the primary market by the company's promoter. So as to attract new investors for subscriptions. Under the public issues, it's called a IPO, initial public offer. As its name suggests, it is the sale of a company's shares to the public at large for the very first time. It's an offer in which an unlisted or privately held company makes a fresh issue of shares or convertible securities, or an already listed company makes an issue of existing shares or convertible securities for the first time to the public at large. In this way, unlisted or budding company lists its shares in the recognized stock exchange and goes to the public to raise funds for running the business. On the other hand, established entities make IPO, facilitate owners to sell some or all of their ownership to the public. FPO, if an already listed company which has gone through the IPO offers new, or in better words, additional shares to the public for sale so as to expand their equity base or pay off debts. It's known as follow-on public offer or further public offer. In short, it is called as FPO. Next type of issue is rights issue. In a right issue, shares or convertible securities are offered to the existing shareholders at a concessional rate on a stipulated date fixed by the company itself. The main aim of issuing a right share is to raise additional funds by offering shares to the existing equity shareholders in the proportion of their holdings rather than making a fresh issue. It is based on the pro rata issue. Then composite issue. A composite issue is one in which an already listed company offers shares on the public cum rights basis and makes concurrent allotment of the shares. Bonus issue, as the name suggests, it is the free additional shares distributed to the current shareholders in the proportion of the fully paid up equity shares held by them on a particular date. The issue of these shares is made out of the company's free reserves or securities premium account. Next is private placement. If a company offers shares to a selected group of investors, which can be mutual fund, banks, insurance companies, pension fund, etc., to raise capital, is called as private placement. Preferential issue is one in which a publicly listed companies allot shares to a selected group of investors such as individuals, venture capitalist companies on a preferential basis.